So class, good morning. We are already in chapter 13, non-bank financial institutions. So let's proceed with our topic. The second most important types of financial intermediaries in terms of resources is the non-bank financial institutions. They provide those financial services which are otherwise not provided by those banking institutions. So, as you will observe, their growth and their staying power is the clue for their importance. As of March 2014, 18.5% of the total resources of Philippine financial system is attributed to the non-bank financial institution. And it constitutes 64% of the total number of institutions in the system. So, what is non-bank financial institutions? Non-bank financial institutions is an institution that offer financial services but do not operate as bank. They also accept deposit and grant loans at the same time but do not operate as bank. Millions of the customers served by the non-bank financial institutions proves that banking system does not fully accommodate the financial intermediation requirements of many people. So, for example, a commercial bank, for instance, cannot persuade an individual to save through a personal selling method. A life insurance company, however, can employ an agent to seek out potential customers and persuade them to buy a life insurance policy. Thrift banks are not inclined to aggressively promote its products like educational plan or educational trust funds. A pre-need company, however, can hire a person to personally convince the prospects to buy educational insurance plan. So, promoting activities of non-bank financial institutions are instrumental in accumulating funds that are made available for the lending and investment purposes. Non-bank financial institutions are classified into two by the Bangko Sentral ng Pilipinas. First, those with quasi-banking functions, and second, those without quasi-banking functions. First, let us understand what is quasi-banking. Quasi-banking literally means those that are almost with quasi-banking functions. This is defined in the General Banking Act as borrowing funds for the borrower's own account through the issuance, endorsement, or acceptance of debt instrument of any kind other than deposit, or through the issuance of participations, certificate of assignments, or similar instruments. First, let us give an example of those with quasi-banking functions. First, investment houses. Second, financing companies. Those without quasi-banking functions naman, an example are financing companies, investment companies, securities dealers or brokers, lending investors, venture capital corporations, government non-bank financial institutions, nandyan rin yung investment houses, electronic money issuers, remittance agents, yung credit granting entities, Pawn shops, kabilang siya sa without quasi-banking functions. Non-stock savings and loan associations, and yung mga credit card companies. So let us discuss those examples of non-bank financial institutions. First, yung financing companies. Siguro naman medyo familiar kayo sa mga to. But let us discuss what is finance companies are those which are engaged in making short and intermediate term installment loans to consumers, factor or finance business receivables, and finance the sale of business and farm equipments. Funds are raised by finance companies just like any other corporation by issuing stocks and bonds, borrowing funds from the banks, and selling their commercial papers. Finance companies consist of three types. First, yung consumer finance companies. Second is yung sales finance companies. Then third is the commercial finance companies. So, when we say consumer finance companies, these are financing firms devoting most of its resources to small loans granted to individuals and families. Ito yung mga usually na tinatawag na lending. Para din silang mga Bombay. Like SME, fund lines. These are lending to individuals and families who are capable to pay